We realize this has been a very challenging year for equity investors. As global central banks try and unwind what's been more than a decade of easy money policy, it's been very challenging to value stocks not only at the sector level, but also at the regional level. And what we've seen is that volatility is back. This is not something we've been accustomed to. Just this calendar year alone, we've seen 10 trading days where the S&P 500 has moved 3% or more. The average that you tend to see in a calendar year is five trading days. Now, we are in the depths of a bear market. We have fallen now 25% from a peak to trough. And we know that bear markets feel bad when you're in them. But what we want to highlight in this table is to show you that bear markets historically last a lot less amount of time than the ensuing bull market, and the drop is not as nearly as bad as you see that rally. This is where timing the market or trying to sell into the bear market at these levels would be dangerous. You can see that typically an average bear market lasts about 13 months. Well, we're 9 months into it. The drop tends to be about 30%. Well, we're down 25%. When you look at the bull markets that follow, they tend to last more than 4 years, and the market's up more than 100%. So at this point in the bear market, you want to go to areas of the market where capital has been afraid to deploy, those areas where they're pricing in the bulk of the downside. Small, mid-cap stocks have underperformed substantially this year. We think are pricing in a bulk of that downside. International equities, they are historically cheap compared to U.S. equities. And when you look at the currency markets, that just shows you really how negative people are about the developed international markets. Look at the euro, look at the pound. In this chart, you can see that these currencies are trading at the lowest levels versus the dollar that we've seen since the mid-'80s, for the euro, really since the creation of the European Union. So we don't think that at this time it's right to sell into this bear market. You'd be acting on emotion and trying to time the market. And what we've showed you is that timing the market when you're down at 25% could be dangerous for the long term. Instead, be patient, have some dry powder, and look at areas of the market that people have been afraid that are pricing in and giving that good reward for the risk that you're taking for that.